The Bitcoin is going to appreciate in value faster than the S&P index. It's going to appreciate in value faster than commercial real estate. And so there's no point in selling the winner to buy the losers. And Bitcoin is the winner. We think Bitcoin is the highest form of property. It's the apex property in the world. It's the best investment asset. So the end game is to acquire more Bitcoin. Whoever gets the most Bitcoin wins.
Bitcoin continues its meteoric rise, setting yet another all-time high of $73,794 on March 14th, fueled by anticipation surrounding the inflow of funds into Bitcoin exchange-traded funds. The bullish sentiment surrounding Bitcoin ETFs is further supported by MicroStrategy's announcement of its intention to increase its Bitcoin holdings. Currently holding 205,000 BTC, MicroStrategy plans to invest an additional $500 million into Bitcoin, aiming to surpass the 1% threshold of the total Bitcoin supply. This move reaffirms MicroStrategy's confidence in Bitcoin as a long-term store of value and highlights the growing institutional interest in the cryptocurrency. In a recent interview, Michael Saylor, executive chairman of MicroStrategy, expresses his bullish outlook on Bitcoin. Saylor views Bitcoin as the apex property in the world and the best investment asset, emphasizing its role as a long-term store of value. With that said, he dismisses the idea of selling Bitcoin at any point, stating that the goal is to acquire more of it with cash flows, equity, or capital raises. Let us now view some clips from the interview, as Michael Saylor once again shares his powerful insights regarding Bitcoin, one of the most revolutionary assets in history. As we show you these clips, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Make sure to stick around until the end of the video, where Michael Saylor guides us on what to do during the crypto winter. We hope you enjoy the video.
Let's keep in mind the fundamental principle. What's the use case of Bitcoin? It's capital preservation. So if you have $1 billion and you live in South America, or you live in Asia, or you live in Africa, and you want the capital to last for 100 years, you're not going to want to buy $1 billion company or $1 billion building or $1 billion of land in any place in Africa. You're going to have to find some other form of property that you can hold for a long period of time. Let's take New York City. Developers of New York City in 1776 didn't have an end game. They've been raising capital to invest in New York City real estate at the all-time high for 300 years. If you went and talked to them today and you said, what's your end game? They would say, well, we're going to keep investing in New York City. If you've ever talked to a person that owned an apartment in New York City, no one aspires to hold the apartment for a few years, sell the apartment, and move out of New York City. They put it in their will, they give it to their children, and if you ask them why, they say there's no better place on earth to live than New York. There is no place up from there. So New York City is the end game for people that want to live in the greatest city in North America. Bitcoin is the end game for anybody that wants to own the greatest property in the 21st century. Let me say it a different way.
Okay.
People that use fiat currency as a store of value, there's a name for them. We call them poor. Okay. Anybody that's rich in the world, they own property. They own large swathes of land. The royal family of England, it didn't sell all of its property in central London in order to buy, currency or paper money. Nor did the royal family of Japan. Nor did the royal family in the Middle East. In fact, they want to own the property forever. I want you to imagine Bitcoin it's a city in cyberspace that's 276 blocks wide, 276 blocks high, 276 blocks deep. About 21 million blocks. Now imagine all 8 billion people in the world want to live there one day. They want to put their capital there. There's $900 trillion of wealth in the world. As people migrate from every other form of property and they've assets into cyberspace, you're going to see the Bitcoin network go from $1 trillion network to a 10x that to 100x that. And there really is nowhere else to go. It is the apex property of the human race. We believe that the highest, best use of capital is to buy Bitcoin and hold the Bitcoin. The Bitcoin is going to appreciate in value faster than the S&P index. It's going to appreciate in value faster than commercial real estate. And so there's no point in selling the winner to buy the losers. And Bitcoin is the winner. And so we're just going to keep acquiring Bitcoin with our cash flows, with equity or capital raises, any other accretive method that comes to mind.
MicroStrategy has been aggressively raising funds for Bitcoin acquisitions in recent weeks. Just before their recent $500 million offering, the company completed an $800 million senior convertible note offering. Originally announced as a $600 million offering, it was subsequently increased to $700 million, with an additional $100 million aggregate principal amount available under certain conditions. The proceeds from these offerings have been utilized to bolster MicroStrategy's Bitcoin Treasury Reserve, with an additional 12,000 BTC added recently. With a current stack of 205,000 BTC valued at $15 billion, MicroStrategy has seen a substantial return on its investment, up $8.1 billion or 117%. Meanwhile, MicroStrategy's stock continues its upward trajectory, rallying by 10.85% to $1,766 on March 13th. This surge in stock price, up 254% since February 6th, has been fueled by Bitcoin's recent rally. Bitcoin's price surge, which has seen a 46.1% increase over the last month, further boosts MicroStrategy's performance on the Nasdaq, making it one of the strongest performers this year. As for Bitcoin itself, MicroStrategy's continued accumulation of the cryptocurrency sends a strong signal to the market about its perceived value and potential for growth. The company's bullish stance on Bitcoin, reflected in its ongoing buying spree, could further fuel investor confidence in the cryptocurrency and potentially contribute to its upward price trajectory. Let us now go back to the interview as Michael Saylor shares more of his insights.
Right now, an institutional investor that wants to buy Bitcoin has a choice of investing in the ETFs, of which BlackRock and Fidelity are very well known, or investing in some other company that has a Bitcoin strategy like MicroStrategy. You could think of the ETFs like ocean-going container ships. They can carry huge amounts of capital. You can invest $1 billion a day in the BlackRock ETF, so they could take on hundreds of billions of dollars of capital. They're not going to trade at a premium, but what they don't have is performance and leverage. MicroStrategy is different because our capital you can't redeem our shares, so it's possible for our shares to trade at a premium. We're an operating company, and that means when our shares trade at a premium, we can either raise capital through convertible debt or through equity. When we do that, we're doing it at a premium to the underlying assets. That captures an accretion for our underlying shareholders. So following a debt deal where we swap the debt for Bitcoin, our common stock shareholders have more Bitcoin per share than they did before the deal. So another way to say that is, if you want to pay 25 basis points and be 1-to-1 levered, then you would buy the ETF. But if you actually want to generate an accretion or a yield and not pay the fee and have leverage, then you would buy a stock like MicroStrategy. You could think of us as we're like air freight. We're Federal Express. We can take you faster, but we're never going to carry the same amount of capital in our payload as a supertanker or a container ship. So there's place for both of those strategies. And in fact, they're very complementary. I think the ETFs benefit from the existence of companies like MicroStrategy, and MicroStrategy benefits from the existence of the ETFs. If you look at our past, there have been periods during the crypto winter when Bitcoin went from 66,000 all the way down to 16,000. In that case, we simply hold the Bitcoin. Instead of being 20% levered, we become 40% or 60% levered. The way that we raise the capital is using convertible debt, and so the convertible debt is a unsecured instrument. It's not marked to market. It doesn't come due except in 4, 5, or 6 years from the point that we issued it, and it's not secured against any other kind of capital. So we don't have to actually do anything. We just wait for the market to recover. And that's what we did in 22. And in 23, we recovered, and our shareholders benefited from the deleveraging as Bitcoin rallied in the other direction.
Saylor's commitment to acquiring Bitcoin through various means demonstrates a strategic approach to capital allocation. By leveraging cash flows, equity, and innovative fundraising methods, companies like MicroStrategy are positioning themselves to capitalize on the potential upside of Bitcoin while mitigating traditional investment risks. Will MicroStrategy's success continue in the long run, or will the company eventually fall with Bitcoin? Though none of us know what will happen in the future, one thing's for sure: Bitcoin's power and reach continue to grow, with no signs of stopping, at least for now. Meanwhile, according to billionaire crypto bull and Galaxy Digital CEO Mike Novogratz, Bitcoin's rally is driven by widespread investor adoption rather than macroeconomic factors, and it's unlikely to dip below $50,000 again. He pointed out that the influx of funds into the ETF complex, totaling $1 billion on the previous night, is driving the price of Bitcoin higher. However, he cautioned that a reversal in these inflows could trigger the first real correction in Bitcoin's price. Despite the bullish sentiment surrounding Bitcoin, Novogratz highlighted the relatively small percentage of the total market cap represented by ETF holdings. While Bitcoin's total market cap stands at around $1.5 trillion, the combined holdings of nearly a dozen ETFs amount to only about $40 billion. This suggests that there is still significant room for growth in Bitcoin's adoption and market capitalization. Novogratz also urged politicians to embrace Bitcoin-related initiatives and interests, emphasizing the importance of regulatory clarity and government support for the cryptocurrency industry. He warned that politicians who oppose Bitcoin may face consequences in future elections, as public sentiment towards digital assets continues to grow. With all of that said, Bitcoin's recent rally reflects a broader trend of increased adoption and acceptance in the mainstream financial world. With regulatory approval paving the way for greater investment opportunities, Bitcoin is poised to continue its upward trajectory, with $50,000 emerging as a new floor for its price. As the cryptocurrency market matures, investors and policymakers alike must adapt to its ever-evolving nature to ensure continued success and growth. Bitcoin's resilience in the face of market volatility and its increasing adoption by institutional players signal a bullish outlook for the remainder of the year. With Bitcoin ETF inflows set to continue and institutional investors ramping up their Bitcoin holdings, the stage is set for further price appreciation and potential new all-time highs shortly. How do you predict Bitcoin and the overall cryptocurrency market will unfold this year and in the years to come? Share your insights in the comments. If you found this video useful, please consider giving it a like and subscribing to our channel for more valuable content on cryptocurrencies and finance. Thank you for tuning in, and we look forward to seeing you in our next videos. As always, happy investing!